What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had another very strong impulsive day as we continue to push to new daily highs. I think this rally will be stalling out at strong resistance very soon, so first up let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up another 1.5%, so we continue to see strong pushes to new daily highs in the stock market, and this is definitely going to be a bullish indication. Remember, we're coming off of a double bottom off 416 and we're pushing through all the resistance and we're getting a bull trend developing in the moving averages, and we very clearly have bullish price action because we just continue to go up. So without a doubt, I know if I took a survey right now and everybody that missed this rally is just dying to get in and can't wait for a pullback, and at this point you're thinking there's no pullback coming, I might as well just buy in because I'm going to miss the whole entire rally. Well, it wouldn't surprise me if that's the case, and it wouldn't surprise me if a lot of you bought in today because that's exactly what these rallies are designed to do. So from here, I do think it's possible SPY comes up here and hits resistance at 453, and I do think that is going to stall out this rally. It's still possible we come all the way up to 457, but I just don't think there's enough energy left in the tank to get to that level without some sort of significant pullback. So remember, on SPY above 458 we're full bull and we're going into a sustainable bull rally, so it does look like it's very likely we are going to break out above that level. But what I do think is going to happen is we're going to get rejected around 453 or possibly even saw the high today, and then pull back and come back down to retest this 20 simple moving average, which is now positively sloping. There is the possibility that we go below that level, and actually if I draw this out a little bit better, it would be more like a deeper retracement down to about 438. Then we would get the bounce and come take out this high, and at that point I would expect to see the break above SPY 458, and at that point I think we would have confirmation of a bull market in the summer. Now don't just assume we have to hold up above 438 because we could go deeper than that and we could retest this breakout level, so there is the possibility of a deeper retracement down to about 432 to 428. As long as we stay above 428, I think it is going to be a successful retest of the breakout, and that will be a higher low in the price action above 416. So as long as we come back up and break out above the highs, that is still going to be a valid retest. So there's no way to know exactly how far we pull back, but I do have some type of speculation that because there is so much FOMO on this rally, there is going to be a lot of people just dying to buy the dip, and that is going to make the pullback seem very shallow. But what's more than likely going to happen is you're going to see that shallow pullback. You're going to start to see it bouncing. People are going to get a lot more FOMO. Like, I'm not going to miss the rally this time. I'm buying the dip and I'm going on for the rocket ride all the way back up to all-time highs. And at that point, we should see that deeper retracement. And at that point, we could go down into the 430s. No matter how this plays out, you are looking for the same exact price action. You need to see support holding up, and it needs to be above 416, and then we need to come out and take out whatever high that we get rejected at. Until we see that price action, we cannot confirm that we're going into a sustainable bull rally, and there's always still going to be the possibility this was a bull trap. I don't think it's a bull trap because the price action is just way too bullish, but you can never rule out the possibility that these are a bull trap until you see the successful retest of the higher low and come back and take out the high. So that's why I always tell you that price action is king, and there's always going to be a very healthy amount of patience and discipline when you're trading and investing. And if you are panic selling your long-term investments as this run up, you clearly have FOMO and you're dying to get back in. So that's why I suggest you have a very clear differential between your trading account and your investment account. And if it's an investment, let it run and let it capture these gains for you, and don't bother trying to time the market. So now that I got all of that off my chest, let's look at the critical levels. To the downside, you'll be looking at 446 and our 50 EMA at 441, and we have strong support at 438 and the breakout level right around 433. And the most critical level to stay above is going to be right around 428. Below 428, it's very likely we're coming back down to retest the low at 416. So that is by far going to be the most critical support level and your 20 simple moving average. Your next bullish breakout will be a close above 453, and we're full bull above 458. And I don't expect getting above that level without a very significant pullback. So that is likely going to be the exact top we see this rally stalling out if we do break above 453. There's not too much else to talk about at this point, so we'll leave it there. And also do pay attention that the volume is starting to die off. So we're more than likely seeing the end of the short squeeze rally and getting ready for that pullback in the very near future. Jumping over to the NASDAQ 100 triple Qs, it's a very similar story as SPY, getting very little pullbacks before we break out and make new highs, and the very critical resistance levels on the triple Qs are going to be right around 361 to 363, and I don't expect to see this rally breaking out above 367 without that pullback. So watch those as the most critical resistance levels. Into the downside, you're looking for support at 357, 351, 347, and 341. As long as we stay above about 333 to 330, that's going to be the higher low scenario we need to go back into a bull market, as long as we bounce off support and come back up and take out the high. So if you're getting FOMO, know that it's completely normal, but we are due for a very deep retracement in the very near future, at least to retest that 20 simple moving average as support before we confirm that we are going back into a bull market. In the Dow Jones, we were up 1.06% today, closing back above the 50 EMA and getting confirmation of the bullish breakout. So at this point, we do have confirmation we're getting the breakout. We just need the successful retest and take out the high. So if the Dow Jones can get back above 348, that will be a very bullish development. But more than likely, we're coming back down to retest support at 340 or our 20 simple moving average right around 338. And then we should see that bounce and come back and take out the high. Above 350, you're looking for around the 356, and then the gap fill at 360. And by the time we fill that gap, we will have a bull trend, and it will look like we're in a sustainable bull rally. As long as we stay above the low at 330, we should see a higher low situation that could break out to a bull trend, and then we could see a bull market this summer. In the Russell 2000, we were up 0.95% today, bouncing off of the breakout retest and closing back above the 50 EMA as we continue to develop a bull trend. Right now, it looks like the small caps are already getting the successful retest, which is exactly what we're expecting to see in the rest of the market. You could see we had the breakout, we had the pullback, retested the breakout, and started to bounce. Now we just need to come back up and take out this high right around 207.5, and then we should have confirmation of a bull trend in the small caps. Your confirmation above that will be a break and close above 212, so watch that as the next critical bullish breakout. If we continue to pull back, look for strong support right around 202 to 201, and if we break below that, you're looking for 197 or the gap close at 195.7. On the Arkk ETF, we were up 1.11%, and we did see support holding at 64 and right around this zone in 63. As long as we could stay above 62, we could go back into a bull trend on a breakout above 71, so the bullish breakout will be above 71 and then above 78. As long as we stay above the breakout level at 59, we could go back into a bull trend. Otherwise, look for that gap close at 54.7, which coming out of a bear market, I think it's very likely like we fill that gap before we go any higher. So don't get bullish until you see the close above 71. On the VIX, we were down about 8%, and we continue to see the VIX getting crushed back down below 24. So we're definitely getting confirmation the market is getting more bullish. We should have confirmation that we're back into a bull market when the VIX closes below 20. And if we see the VIX spiking in the short term, that's completely normal because we're due for a pullback. So as long as the VIX isn't getting above 30, it's just going to be a buy the dip situation with a slight spike in volatility. When we see the VIX closing below 20, we should be back into a bull market, so we'll need to watch that very closely. On Bitcoin, we're currently up about 2.6%, and Bitcoin is very close to testing the breakout level at 45,000. And like I told you, we do have a confirmed double bottom breakout with a price target at 46,000, so I am expecting to see this bullish breakout. Once we break above 45,000, we're going to have price targets that take us all the way back up to 51 to 53,000. So I'm expecting to see Bitcoin getting very bullish and very impulsive in the very near future. And I do expect to see these resistance levels getting absolutely blasted right through. So watch the price action very closely because this is looking like a very bullish setup with strong support right around 42,000 and 41,000. If we break below those levels and we can't hold above the 20 simple moving average, you're looking for a retest of support at 37,000, and below that you're getting bearish because we're more than likely coming all the way back down to 30K. On NVDA stock, we had an extremely bullish day today, going up 9.8% and closing above very critical resistance at 267 and 279. Remember, I told you on a break above 267, we're very likely heading into the low 300s, and you can very clearly see the stock market agrees with me with such a strong bullish day closing above that level. So this is going to get very impulsive because this is a very bullish setup coming off of a multiple bottom and breaking out above the neckline. So this could continue to run all the way into the low 300s. From here, watch for resistance at 293 and 309 with downside support now at the breakout level at 267, 256, and 250. On Tesla stock, we were up about 1.5% today, breaking and closing back above 996. So Tesla is getting the bullish breakout as we continue to see high volume buying and starting to develop the bull trend. It looks like we did successfully retest the breakout at that support, but it's still possible we thoroughly test that level. So look for strong support at 996 and right around 970, with the breakout level below that right around 937 and our 50 EMA at 903. These are very strong support levels, and it does look like we're going back into a bull trend. So as long as Tesla is above $900, you need to stay bullish. Price targets to the upside at this point will be 1065 and 1108, so watch those as very strong resistance. On Apple stock, we were up 2.27% today, and we continue to see Apple looking extremely bullish with multiple green days in a row. And at this point, Apple is just getting way too overbought. We clearly have the bullish breakout, very bullish price action coming off of the low, and we blasted right through that resistance at 172. The next strong resistance will be 176, and I don't see any way that Apple is going to close above that level without a very significant pullback. So at this point, even though Apple is looking very bullish, in the short term, it's due for a very sizable pullback. From here, I would expect to see a retest of the breakout at a minimum right around 168, and more than likely a retest of support right around 165, and our support trend line is also in that zone. You can see our 20 simple moving average will also be right around 165 in a few more days. So that's the level I'm looking to see Apple retest before we can go any higher. So look for a pullback in the short term, but in the long term, I do think Apple is trending up towards 188 with resistance at 176 and 182 on the way there. On the financial sector, we're up 0.8% and we continue to see bullish price action in developing a bull trend, but we still do have that gap below at 37.5. On the industrials, we were up 0.76% with bullish price action into developing a bull trend, and we're very close to going up there and closing that gap at 106. On the healthcare sector, we're up 1.19%, developing the bullish trend, and we're only 1 day away from having the full bull trend, so it's very likely that we're going up there to close that gap at 141 in the near future. The energy sector was up 0.25% today, but continues to get rejected at the previous 52-week high, so you need to see bullish price action breaking out above that level to hold the bull trend. If we get rejected from here, it could turn into a double top that could break down below 71, and then we could start to see this bull trend rolling over and starting to die. That overall should be bullish for the rest of the market because this money is much better off in other sectors that have more weight by market cap in the S&P 500. Also take note that the volume in the energy sector is starting to die off, so by far we're starting to see weakness in this sector. So jumping back over to the S&P 500, this is definitely extremely bullish price action, and I'm trying to warn you not to get FOMO because we're getting very close to a significant pullback. From here, we could easily see a 3 to 5% pullback and possibly even more. So if you're getting FOMO, make sure in the future that you don't sell your long positions and have some type of investment that can capture these long-term gains. There's no reason to try to time the market, so don't bother selling thinking you can buy back lower. Just ride the wave and let your money do all the work for you. As traders, you need to know exactly where your risk levels are and know your entries and exits accordingly, and never be afraid to make a trade as long as you define your risk, go for that trade, and if you end up losing, learn something from it and move on. As a trader, you should know exactly where your risk levels are, so never be afraid to make a trade if you see the proper setup. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all this market volatility, I think now is the best time to be a bank member. You can find out all the information and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.